unshare this one. Okay. Let me know if you have access to it, or can you or cannot.
Does that work?
You push, there's a green button in the middle, right? It says share screen.
Yeah, it says host disabled.
Oh, okay. Let me see. Allow multiple allow to record local files. Make. All right, I'm gonna right click your name under participants, and I'm gonna make you the host.
Okay.
Okay. All right. Now you can share screen.
Gotcha.
Awesome, awesome.
So you can see that.
Let's take a look at what are some things that you trade, and maybe we can chart it up so you can get prepared for
Probably trade MRO the most.
MRO. MRO. You trade MRO the most?
Probably, yeah.
Okay. Do you trade any of the tech stocks at all?
It depends, very rare. I have to really see something that stands out. Yeah, because I'm still pretty green with all of it. Because I've noticed Apple seems like it can do whatever it wants to do, along with, Amazon and Microsoft.
Okay, because yeah, like for something like MRO, it might just be normal support resistance, which you could trade, but with Apple, we can maybe find some fair value gaps or a way we can build a structure. Or you could just we can create the we could chart up Apple and that will kind of be your guide for if SPY or Qs are going up, right?
Uh,
Okay. So did you want to do you want to turn on extended hours just for this exercise? Okay. All right. Let's go real quick to the hourly time frame first too, because that's the first thing we want to look at. I mean the daily, sorry. Okay, so let's just see if there are any gaps that we need to fill. Okay. You could click the under the ruler, there's a magnifying glass. You see it? On the left, on the toolbar, in the toolbox, there's a magnifying glass. Yeah, under the ruler. Yeah, click that and then put a square on the cup that we're in right now. So that little area that we're in, just create, yeah, just a little higher, a little higher. Yeah, perfect. Okay, so let's just see what areas we're working with. Do we have any gaps to fill to the upside and downside first? Do you see anything? Hello?
okay. All right.
Yeah.
What was I looking for?
Do you see any gaps that we need to fill to the upside and downside yet first?
Yes, from here to here.
Um, well, the gaps, like gap
Oh,
is,
you
remember
talking about up here?
the gap is the closing price there. So I like to use I like to use a horizontal ray, the thing and then right there, and then mark out where we closed on that candle. Yeah. So that's the gap. If we touch that, that means the gap has been filled.
Okay.
Okay. So that's a good thing. And what about to the downside? Do we have any gaps to fill to the downside? Like maybe the previous candle? A little higher. I'll go a little higher first. The ones that are closest to us. Okay. Do you see, where do we close on that green candle?
On this one?
Yeah, where do we close? Right there. Do we does that part ever got touched again?
Oh, no.
Yeah, I would put one right there. Okay. All right, let's go a little higher.
Level 102?
No, that's not the gap. That's that there is a gap there, but the gap fill is if that one was touched.
Okay.
Okay, so let's see. The next candle over, was that gap filled?
No.
Where did we close?
Close right here.
No, that's where we touched, but we closed where the body, the end of the body.
Oh, yeah. I just think that. Yeah, right there.
Yeah, did we touch it?
No.
Then that's a gap. So we have three gaps, upside and downside. Okay, let's see if we are missing any other gaps. There may be one more if you let's say zoom out slightly. Zoom out slightly. It's further back in time. Let me see if that one is actually touched. I'm not sure if that one was yet. Uh, right. You see that green one right there on the left? Left. A little to the right. Was that one one more to the right? That one. Has that one been touched yet? The where it closed.
Yeah, it looks like it's probably right here.
Let's see. Okay, so put a line there just in case, and then zoom in, click the magnifying glass again, and then click and then hover over the red candle that you thought it touched, and then make a box there. Yeah. Did it touch it?
No, it's very close.
Oh, yeah, there we go. And that's a gap that hasn't been filled yet.
All right.
So there's a couple gaps. There's a couple gaps. I mean, that's debatable, right? That's very close, but we'll just have it there marked out just in case. All right. So that's just the first thing that I like to do, just to see if there's any gaps to fill to the upside and the downside. Okay.
All right.
Another thing that helps too is that if you click that the line where you started, but also click the magnet underneath them those magnifying glass that I showed you earlier. There's a magnet. Okay, click that. And now click the horizontal ray again where you started it. Oh no, the one that's already there.
This one right here.
The one above it. If you click where it started, where that little dot is. Yeah, click it and then drag it down a little bit. And it's a magnet now. So that's actually where it closed.
Okay.
Okay. All right. And you want to do that with all the other ones? All right. Put that where it started and then drag it to where there we go. So then if that's the case, then when the gap might have been filled already. Yeah,
Yeah, let's see.
it was, huh? To the T.
Yeah.
Wow. It was filled. Okay. Interesting.
Let's take that one off.
Yeah, you could take that one off. All right. And then now just drag the other ones that are on the bottom over there. Yeah, just so we can make sure all your levels are good. You see how it's a little off? Yeah.
Yeah.
Just drag it. Yep. And the other one now you can drag it. It automatically attaches. It may look a little funny if you switch to smaller time frames, but that's okay. I think you moved it to the bottom. I think you need to make it to the top. There we go. Perfect. All right. So now that we have that down, let's go to the 4 hours and see if we could find some type of um any fair value gaps.
Now, do you always start from left to right, or does it matter?
Yeah, left to right. I always do left to right. So you can make it skinnier. You can make your chart skinnier. Yeah, skinnier, and then drag it over. All right. Do we see any fair value gaps?
Yeah, I'm gonna say from here to here.
Yeah. What you could do right there is just connect, you know, where your fair value gap started. Just go to the other side. Yeah.
Over here.
Or no, like on the left side of it, then left of it, and then left. Yeah, where it started. Because it's a three candle structure. No, just the two candles over, or just one candle over. Just the first candle that
Okay.
started it right there, and then now you want to just let go, and then you double click it, and then you go to style, and you just do extend to the right.
Oh,
So it gives you the exact zone.
yeah, it's a lot easier.
Yeah. Okay. So, all right. So that's a pretty big one. Now let's take a look real quick. Let's go to the hourly first. Okay, next. I mean, let's go to the hourly and then go back to the same spot where the fair value gap was made and see if we can make it a little bit tighter, smaller. Because sometimes when a fair value gap is really big, there might be smaller fair value gaps inside of it. So let's go back to where that's fair value gap started. Okay. You see how it's smaller? So
Yeah.
you can adjust it now to make it part of the hourly since it's in the same spot. Okay. So what does that tell you right now? It tells you that we're at some type of resistance. That doesn't mean that we can't rip through, but if we do start to fall, right? That could let you know that hey, we might have an opportunity to come down and touch those gap fills below. Okay.
All right.
Wait, so you want to take the right side of the box? All right, there, and then make it to the red, to the top of the red. Drag that to the left, to the top of that. There. Oh,
Well,
there we go. Perfect. So that's your resistance, okay?
all right.
All right. Let's try to find other ones on the. Let's go back to the 4 hour. All right. You can right click and just click reset chart view. Or you can do that too. All right. Let's see. Let's make it even. Let's make it even skinnier. Make it skinnier again, so we can see what the past data skinnier. All right, go all the way more skinny. There we go. So let's try to find some support resistance, like how we did it earlier, how I showed you earlier, where we had the wicks of the bottom touching the wicks at the top on different areas of the chart. Okay.
Oh, yeah.
Okay. Those are good, but remember in the beginning I said that what I like to do instead of just horizontal lines, I like to make a little zone so we're not
Oh,
faked out.
yeah. The blocks.
But again, you know, it's always up to what makes you feel comfortable. But just
No, I
for
like the.
learning purposes, the one that I think stands out to me is at June 15th. June 15th, the highs of that, and connecting that with the lows of or the body of July 10th. July 10th. June, July, the next month. So drag that to the next
Okay.
month. July 10th. There we go. So I take it to the body right there, which is the price is 187.47. 187 is the high, 47.
This is 187.
That yeah, the highs of it. So 180. The bottom is fine. The top I want to go if you could drag it to 187.47. 187.47. And 46 is okay too. Okay. And since that is not a fair value gap, would you change it to what color would you change it to? Just so you don't get mixed up.
What'd you say?
I'm saying if it, since it's not the fair value gap, I would maybe color code it differently. You could make it a different color.
Yeah, let's see.
So you could double click it. Or once you get to that, once you see the highlighters come up and then double click it. There we go. Okay. Perfect. All right, let's go to, let's see.
What about that one?
Yeah, that's okay. You can do that one too. Hopefully we don't fall that much. There we go. There we go. So that gives you a little range, right?
Yeah.
Okay. And can we possibly do, let's do, all right, let's go. Let's go to the hourly time frame again. And let's see if we can zoom into where we are now. All right, so let's,
What right there? That'd have been better than this one.
you could have both of them because they're $10. They're like $7, $8 apart, right? So if it's like, yeah, if you give you some because you want to create a zone where you could play a range to a different range. Let's go a little higher so we can touch the one on the right. You see that, right? A little lower. There we go. Around there. Yeah, that should be good. Boom. Okay.
All right.
So that lets you know now, like the opportunities that you can do right here is if we fall below 186, right? If we lose 186, then potentially we can right? If we lose, what was that the gap, right? Where was that zone start? Or where's that zone, the bottom of that red zone right there? What number is that at? 186.57 for you? Okay.
58.
Yeah. So let's say like, yeah, if you see we're running into a fair value gap, and if we actually break below there, right? It gives you an opportunity to treat that as a resistance to take you down to the gap fill, 184.
Okay. So if it breaks that line right there, it's got the chance to come down here.
To the, or yeah, at least to the gap fill, right?
Yeah.
Right. So that's typically how you would want to, or if you're experimenting with creating a support resistance area. And I'm not saying to trade this necessarily tomorrow or whatever. Just since you don't really trade Apple, it's good to see how price reacts on those levels that you created, and then you could find out what you need to do to tinker with it. But right now, that's a good start. You got your gap fills marked out. You got a little bit of support resistance area marked out as well. And now we could see. Okay, let's go back to the daily. In case that fair value gap that we have above us gets disrespected, and meaning that we break upwards, which is there is a chance because stocks always tend to go up, especially the big names. So let's zoom into the just the high points, the swing high to now. Yeah. We'll zoom in. Okay, so in case we disrespect the fair value gap above us, is there any gaps that we haven't filled to the upside yet?
On this side over here.
No, to the that are on the previous, like the previous swing high over there. Did we create any gaps and closing candles that we haven't filled yet? So the 3 red candles that you see right there were the EMA, were across the EMA, the red
Yeah.
one on the right side. Like if you move like right, all the way right, right there.
No, looks like it's not. Well,
We didn't. Did we fill it?
no.
Okay, so that's an area that I would mark out. Perfect. Okay, that's the gap though. And what about the candle before that candle?
Right there.
Did we fill that one?
Don't think so.
So you want to be able to have areas of interest on both sides. Okay, so that's, and remember, it doesn't always have to go straight to the gap fill. Sometimes we go to the gap fill and we reject it, or sometimes we're just short of the gap fill and we reject, as we've seen with the other examples.
Mhm.
Okay, so now let's take a look on the 15 minutes. Okay, let's take a look how. Okay, so yeah, we're at resistance. Can you zoom out a little bit more? Just so you can see the other side. Okay. So yeah, we're at resistance right now. We're kind of creating lower highs and higher lows at the same time on Friday, right?
Right. Yeah.
That's interesting. So yeah, what I would like to see at so usually like for this type of price action, I would like to see how we respond to the to the uh to the to the fair value gap above. If you want to take a look at what we call it, August 24th on with the same time frame. So go back to the August 24th with the same, just drag it and zoom back. August 24th. August 24th. August 24th. Okay, so the beginning of that day. You're right there. So where did that day start? You see how we responded to the resistance, the rejection? You see
Yeah.
that red zone you created? Okay.
Yep.
So what would help me set me up for the day is when the day opens, I would like to just mark out the pre-market lows right there. So where's the pre-market lows?
So this is before.
That's the pre-market high. And then pre-market, where's the lowest point of that yellow zone? The lowest part of that zone.
I believe right there.
Well, that's the highest point, right? Where's the lowest
Oh,
point?
wait, no, wait. Right here.
No, the lowest part of the whole entire yellow. Like where's the candles the lowest at on the yellow zone? So it would probably be at, the price would probably be at 180.31. Or yeah, 180.30. That's the lowest of the red. I mean, that's the lowest the price was at the yellow zone, right?
Oh, okay. You talking this block here?
Yeah. You see that? So I would just mark that out in, like, I don't know, in a different shade other than your gap fill shade. So you can put a line there and just change the color. You can make it just make it just a red line or something, or blue. Yeah, that's fine. Red, yeah. So now drag that all the way to the left side. You can just go left, 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 left on D-pad or something, just in case it doesn't magnetize. So that's the support resistance area. Yeah, it's because it's on magnet. So what you want to do is you can grab the middle of the line instead of the edge. Grab the middle of it. Yeah, and then yeah, grab the middle and then just pull. You can pull it down whatever you want. Pull it down to 180.30 right there. So now because you have your resistance area marked off where it's at, and you see price breaking like a pre-market low area like this, that could be a reason for you to get puts to find a liquidity or a zone to target. You get me?
Okay, yeah. Yeah, I got you.
So that's the support that's broken. So that's how you play a pre-market strategy with the zones that you made on your own. You did that,
Wow, that's really cool.
right? So let's try to find the next day. The next day, there's after it bounced off of support the next day. That's the same day, right? So there was the next yellow box to the right on
Now,
the
is each one of these boxes right here that's a different color? Is that the day?
no, that's the pre-market, and the pre-market's the whole yellow area. And then the blue is that after the market closed.
Oh, so I didn't know that at all.
That's good. So the pre-market low, when I've said that, right, is the one that broke. So now we go to the next day. All right, let's take a look. Yeah, that's the next day. We can see how price reacted to your zone. Did it hold your zone? All right, let's keep sliding over. You see how it bounced off your zone and came up?
Yeah.
So what you can do is let's see. Let's try to find I'm trying to mark out you can mark out the pre-market high. Now you want to find the high of the whole
Here.
yellow area. Yeah, the high of the yellow area. So it would probably be right there, that can above that candle. So it's probably like what 177.43-ish, right?
Yeah.
So so what you want to do when you're that close to support is not just play any break to the upside. You would prefer your price to touch your support first and then play the higher low. So you see how you had the big red candle reject right there to come right back down, and then you held your support. So what you want to do is wait for us to establish a higher low. So we go up again, and then we made a higher low. That's good. And then once we make the next higher low again, you see how we created that tweezer bottom. So
Yeah.
that's just showing you that
Okay.
it was respecting your support area a lot. And after it hit your support area, then it made higher lows. Let's see. What day is 25th? I'm gonna try to 25th. Okay. Let me just draw the same zone as you so I can follow along. Okay. And then okay, cool. So now go to the 5 minutes on the same day, 5 minute chart on the same day. So now you gotta zoom out and go back to the 25th. 25th. Is that the 28th? Yeah, you gotta keep going further back to the 25th. Okay. So since you're learning about fair value gaps, when the price hits your support, right? Did it create a fair value gap?
On the
So
25th?
yeah, during the market hours when it's not yellow.
Oh,
So
it's not yellow.
yeah, when the whole area that's not yellow, you don't count any of that. So you go to the right candles, the candles that are not yellow. Yeah. So when we hit your support, which is red, did we create any fair value gaps after we bounced off your support?
Let's see. Yeah, kind of. I mean, a small one right there.
That's a big one.
From here to there.
No, the next candle.
Oh, you want the green one?
That big green candle, right?
Yeah.
You see the big green candle at for me it's 8:05. It's 10:05 for you.
10:15.
No,
Wait.
10:05 right there.
Yeah.
That's a fair value gap, no?
Oh yeah, I was looking at the small one right here.
No, we're looking at the big one.
Okay, yeah.
So create a fair value gap right there.
What?
Just go from the remember it's a three candle structure. So it's right before the big candle and right after the green candle. That's where it starts and that's where it ends. Does that make sense?
Yeah, I keep forgetting about the three candle structure part.
Yeah, it's just the gap in between when you have a big candle and that's the middle, and the candle before it and the candle after it, there's a gap. So that gap starts at 176.30 and ends at 176.68. $68, $68, right there. Do you see that?
Yeah.
So zoom in, just magnifying glass and zoom in just to where you did the fair value gap. Just those 4 candles area, 5 candles. It doesn't really matter. Just that whole area. You see where it was started and where it ended? That big candle why I told you to put it there.
Yeah, right here.
Or zoom out a little bit more. I can't see the beginning. You see that wick before that big candle? That first candle before it. The left candle? Right there. That's where it started, the fair value gap.
Okay, yeah. So I need to bring it down a little bit.
So you can just drag that box to right there. The bottom of that box. It's right there. Yep. And then the top of the and then the right side of the box, right, is to that next candle after that big candle. The body right there. That's a fair value gap. And you see how price reacted at that fair value gap?
Yes.
And then and then now zoom out slightly. Just zoom out slightly, just like slightly. And a little bit more so you can see how the day played out. How did the day continue after that? A little bit more. Okay. Now lower the now make it squeeze it smaller. Yeah. You see how price reacted to that fair value gap later on?
Yeah.
So that's the higher low. And that's letting you know, hey, we can sweep liquidity to the upside. Now go to now zoom out a little bit so you can see the swing high earlier in the day. Where's the high point of the day? Of the morning. So at 7:50 at 9:15 for you. What was the high point? The
On
highest
the
point.
25th.
Yeah. What is the highest what was the highest price of 9:15 for you? 9:15. So it's 11, 10. There's 9. All right, 9:15. What's the highest point of it? So draw a line on the highest point of it. And that's called internal. That's internal liquidity that was swept after we bounced off fair value gap with higher lows. Then that's the target. Once you get there, you can exit your contract after you entered on either the break or the retest.
Okay. All
because
right, I
you
got
have
you. That
support,
just made a little sense. Yeah.
because you created a support right there. We created a support right there that we bounced off of, and then it created a fair value gap. So that's double support.
All right. Yeah, that just
Right?
made a lot more sense, especially closing this off. You can kind of see it better.
Yeah. You see that?
Yeah.
So that's how you use support resistance.
And then after it broke it, you would just start your lines over, you said?
After it touches it, and you let's say you don't have too many contracts, that's where you just get out.
Uh,
Okay, so there's a tool above there's a box, right? A rectangle with a box. Right above it, there's something called the long position. So if you go to your tools on the left side, right above that box, right there, click it. So go to the after the second time it touched your fair value gap. So it touched your fair value gap right there, and then the next time it came right back down and touched it again. So go right, 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 more right, more right, more right, right there. After that retest, you click it. All right, and you can move the top part all the way to your red line. All right, and your stop loss in the bottom, move it to the bottom of your fair value gap. If you're ever having trouble, just drag it to the right side of your screen, like your mouse to the right side. There we go. So it doesn't magnet anything.
okay.
So that's how you find your risk to reward.
Oh, nice.
You see how it says 5?
Yeah.
So that's a good trade if you entered. And it might come all the way back down, but until it goes below your fair value gap or any other type of support that you created on your own, whatever, however you want to do it. Not everybody uses fair value gaps, but until it gets back down there, and let's say closes, and then that's when you exit for losses. So a lot of traders, they'll create this risk to reward ratio, and they'll let it hit their stop loss or let it hit their target. They don't get scared and take profits in between. And that's how you kind of create a system which you can replicate.
Okay, I think I got you. So you basically can just, as long as it's staying like in here, you've still
It's
got a
fun.
chance for it to come up.
Yeah. And if you're getting nervous because it's a lot of money, that means your contract expiration is too soon.
Right,
Or you
right.
don't
Buy
have
some
enough
time.
money. Yeah, or it means that you don't have enough money in your account, or that means you're buying too many contracts. You want to let it kind of play out to your targets after using your bigger time frame support resistance and using internal fair value gaps also to guide you in your stop losses and stuff.
Okay.
You see that? That's a
Yeah.
beautiful
I
that's a
like
beautiful
that.
trade. And yeah, and another confluence to be in is like, oh, there's an imaginary trend line you see from those highs to the highs. There's an imaginary trend
Yeah.
line. Oh, not that one. There's the one from the high point. If you grab a trend line, which is right where your horizontal ray is, you click the right bar and click trend line. So you take the 915 highs and you just cross it through the next swing high, which is you want to let it cross. Hold on, let me find it first. You want to let it cross 10 35. Yeah, that one. Perfect. You see how it broke and it held?
Yeah.
So
Like
if
right
you're
here.
in yeah, exactly. So you have that trend line, which is what? A bunch of liquidity. They're all liquidity. Remember, swing highs are liquidity.
Yep.
So that's what a trend line is for. So if we're bouncing off of a support and you see a trend line, then our goal is to take out all the liquidity.
Oh, hell.
See that?
Yeah.
Perfect. Perfect. Okay. Let's do one more the next day. One more the next day. So let's delete the red lines just to get them out. No. Click control undo. Or that where you see the replay button? You see the replay button? Right on the right side of the replay button, there's a undo on the right side of it. Right there. Okay, click that. Okay.
No way.
I just wanted you to delete the 180-30 line. Yeah, delete that. Yeah, and then you can delete that one too.
This one right here.
Yeah, delete that one. And then you can delete the other red line below it. And we're gonna just try one more exercise where we utilize your levels and see if we can enter in the next trade the next day. Okay, so based off of which is that's the 20 now it's the 28th, right? It's Monday the next week. Okay. So what you want to do is that knowing that we just bounced off of, let's zoom out a little bit more so we can kind of see like more candles. Just want to see more candles to get an idea where we're working with. We're bouncing off support. We're creating a higher high. So on Monday, we're looking at let's do the same thing what we did. What do we do at the beginning of the day? We marked out the pre-market highs and the pre-market lows. So the highest point of the yellow, right? So zoom out a little bit. What is the highest point of the yellow?
Here. Oh, well, you're
Yeah.
talking about at the beginning.
No, just the highest point of it. The highest point of the whole zone.
Yeah, the highest point of the whole zone, but up here.
Yep, I'm gonna mark that out.
Now, you do the ray or the horizontal line?
Horizontal ray. So right there. And what you can do is just so you don't get yourself confused is just go to the left side of the yellow zone so you can see, yeah, grab the middle of it first. Yeah, grab the middle of the line and then drag it over just so it doesn't magnet anything. So drag it all the way to the left side. So you let it just to remind yourself that it's the pre-market high, not a yeah, that's fine right there. It's fine. Okay. And we can do the same thing with the lows as well. So that is around, some people do it the after hours low. You could do is up to you. You want to do the pre-market or the whole entire after hours. But you could just do it here for exercise, right? This is 178.40-ish, right? Okay. So if price is in between both support resistance level, which you have, uh that could be a lot of consolidation that day. That's fine. It doesn't have to be super perfect. That's just letting you know if price is in between there, it's best to be safe and either let it kind of create a structure. So let's go to what you call it. Let the candles kind of like, you could just drag the screen a little bit more to the right side so I could see what's going on the day. All right. So you can see right there. Do we create any is there any trend lines? Do we have any trend lines going up or down?
Yeah, we've got one that comes down here. So going up, down,
No, like
up.
closer to the end, closer to the end.
Oh, over here.
No, on the yellow is fine, but I just like, you don't want to do it like at like 2 in the morning or 3 in the morning. You want to do it more closer to like, yeah, around there. So is there a trend line anywhere that leads us up to the top?
Yeah.
Okay, it could be on the bottom as well, right?
Right.
Is there a trend line? So you can turn off the magnet right there real fast. Okay. So the bottom, that creates a lot of liquidity right there, right? So draw a line right there, all the way to the end. You can do more, and then lower right there. You see that?
Yeah.
So right at open, what happens?
Shut up. Oh, wait, no, it broke. Come down.
Yeah, it broke down. And we took all the liquidity. Did we take all the liquidity?
Yes. 'Cause everything
Okay.
else is staying below the
And
trend line.
if you go to just the previous day too, so go to yesterday real fast, just drag the screen over to yesterday. I forgot to do one more thing. All right. So when we closed at the price that we closed at, where did the candle close on the last day?
This day over here.
No, that's the after hours. So where did we close? Yeah, there. Where did we close? What was the closing price? You want to mark a line, draw a line where we close, where the last candle closed. Horizontal ray. Where do we close? Right there? Yeah. Okay. Make it gray, just like how you did with all your other gap fills. Okay. Now fast forward to when we broke the trend line, where did the price come down to?
When it like first broke it.
No, no. During like the yellow dotted lines that you have, that's the trend
Right here.
line. Yeah, that's the trend line, right? And you go all the way up, or it takes us to the opening, right? No, you can go all the way to the opening price, so 9 at 8:30 for you. Okay. Can we zoom out just a little bit? There we go. All right. So once we break the trend line, we create lower highs, and then price. What was the low point of the entire day now? Once market
Entire
open,
day.
right?
Uh, market open.
No, because that's the high point of the day, right? At that time, the lowest point is where that you see the red line hit the gray line. The red candle hit the gray line. That's the
Right
lowest
here.
point of the day. That's the lowest point of the day, right? You agree?
Yeah. Yeah. Right here.
Yeah. So it filled the gap. That's filling the gap.
Oh, okay.
The
So
the
from the
after
beginning there.
hours, the after hours and the pre-market are just levels, right? But filling the gap for me is during market hours, which is not yellow or light blue.
I got you. So like from where the trend line is to here, that's been filled.
No, that's where the gap is filled. Everything else that's in the yellow that hits the gray line does not count as gap fill.
Oh, okay.
Because if you turn off extended hours, there's no candles there. There's no candles there. You see? Now
Yeah,
the
I got
gray
you.
line is touched over there. But when you turn it back on, the gray line is touched a lot earlier, but that is not the gap fill. The gap fill for me is during market hours. So you can zoom out and then go back to your line. Go back since it's yeah. Go back to the 26. That's way after. Right? You want to go back. Back. Right? No, wait, hold on. What day is that? That's the 28th.
28.
Yeah, go back. Yeah, go back more. All right. All right, there. See now that gray line, you see how all those in the yellow zone, there's so many candles, but when we turn it off, there was no candles.
Right. Yeah.
That's why I count the gap fill as during market hours and not pre-market. So remember, the light blue is after hours, and then the yellow is pre-market. Those levels matter in terms of playing an opening range breakout. And the opening range breakout for you would be like once we break that trend line and we create lower highs, we're looking for that gap fill. It may not always get there, but after we fill the gap, you see the trend line back to the upside.
Yeah. Right here.
Yeah, but there's the high point of the very last candle of the pre-market. There's that high, and then we could take it to the next swing high. So if you draw a trend line from the high right there, yeah, and then you can go to the next swing high, a little lower, like the red. You see that the little evening star that is at it's 7:25 for me, so it's probably 8:25 for you, or 8:25 right there. So you draw that one all the way through. All the way through. You see that? a little higher, right there. That's a trend line. And remember what trend lines are? It's called a liquidity, and they're going for liquidity. See that trend line right there?
Yeah.
And then once we break it out, the price is going to try to take some liquidity. So we go, so once we take that liquidity, let's say we have we break out. For me, that's 1040 for you. We break out at 1040. And the first target you want to go for is 179.94. $94 right there.
That's your first target.
Yeah, because that's the former swing high where the trend line touched the second time. Horizontal ray to the top right there. That would be your target. Boom. Okay. That'll be your target on a trend line break.
So when this is out here, it starts to come up. That's the target we're looking for.
Yeah,
It's
because we
gonna-
created that impulse candle. You see that impulse candle at the very bottom? That was the biggest green candle right there. That creates a fair value gap. You
Yeah.
see that fair value gap right there, that 3 candle structure. So you
Yep.
want to draw a zone right there real fast where the fair value gap is, started and ended. Started right there, yep. And ended a little higher. No, the bottom of that wick, a little lower, a little lower, a little lower, well, right there. So if you're creating your long, you click the long thing right above the square. There's a toolbox right above the square, remember? That's called long. You click
Oh
that,
yeah.
yeah, and you put it on the trend line break. And when the candle broke out of the trend line. So that, yeah, a little higher, a little higher. That's where the fair value gap is. But when we broke the trend line, which is the yellow line, wait, a little higher. What does price break out? Right when we break the past the yellow line right there, right?
Yeah. It's like right there.
Okay, put it right there. And then you put your stop loss below the fair value gap. Okay. But it's
Well,
also
let's
up
go.
to yeah, so that's up to your discretion. But usually when the price starts moving in your favor, then that's you wouldn't want to bring your stop loss to like break even or a little higher. Okay.
Yeah, that's one thing I've gotten to where I do here lately. It's like as the percentage goes up, I'll move the stop loss, up.
But that's not too bad of a trade, right? It's not too bad of a
No,
trade.
not at all.
Okay. So from that trend line break, 79 to like what was the price from where you got in and what was the price when you got out? So that right there was the price. 179.32,
Yep.
179.30. And what's the when you got out?
I got out at Target.
Yep. How many cents was that?
You said what, 179.30, so
Mhm.
64.
That not a good trade?
That's a good trade.
Yeah. So, but if you were somebody who was holding, let's say to the high of the day, so let's bring that box all the way to the high, that box all the way to the red line, all the way to the red line. Okay. And then drag the right side of the box all the way to the end of the day, all the way to the end of the day. Okay. That takes us to our target, which was actually a 97-cent move. We would have been scared that we could have potentially got stopped out, right? But
Right.
because we came back out, but was there a reason to exit?
No, not
Did it
really.
hit your stop loss?
No. Well, if I'd have moved my stop loss up, it would have.
No, it didn't.
Oh shit. I was looking at the wrong box. My bad.
No, it's the red. It's the red, but it has to be below the red.
Right. Yeah.
That's your stop loss.
Okay. Yeah, I got you. I was for some reason I was thinking right here.
No, you're good. You're good. You see how you create some people get scared because they see that they're green and then now they're red. But in reality, if you're buying multiple contracts,
Right.
some people are leaving their runners. it might go back to break even, or it might be a little bit red. But if there's no reason to exit and you have a solid plan of how you build your support resistance, then there really is no reason to exit.
Right. All right. Yeah, I got you.
Yeah. So experiment with the trend lines. Experiment with drawing. You see how I drew that fair value gap right there, right? There's a lot of other fair value gaps that were previous, but the reason why that one stood out a little bit more is because after target was hit, and then we established that we created like a higher low, and we're in an uptrend compared to yesterday. So that was the reason why, another like multiple reasons why you would create a fair value gap there, instead of just trying to short the market on the first fair value gap we got. Okay.
Okay. And the fair value gap's always 3 candle structures, correct?
It's always 3 candle structure. It's where the previous candle before the big candle and the one candle right after the lows and the highs of those two candles, the candles before and after. So the high of the candle before and the low of the candle before after.
Okay.
And that's just it's
gotcha.
one of the ways that people use it to either enter a trade or they use it to as a stop loss. Okay.
I got you.
So there's a couple of tools that you can use. You could probably just save this on your chart for now, and you could even save your support resistance because I think they're a really good support resistance. As you could see, the examples that we used, there was a lot of different touches.
Yeah.
All right, let's zoom out a little bit more. Let's go back to the hourly time frame. Let's go back to the hourly time frame. Okay, look at all the touches that you built on your own, and there's gives you a lot of opportunities to trade, using your bounce areas. You see?
That is crazy.
And you did that yourself. Okay,
Yeah, that
but
is
what does that
absolutely crazy.
mean? What does that mean? Because we're doing it in hindsight, right? A lot of times when we go back and we look, then it seems a lot easier, but during market hours, it could be confusing. One thing I will note is that you see those days where we're in between your support and resistance areas. Those are the
Yeah.
days where you have to be those are the days where you have to be careful. The days where we're in between your support and resistance area, there's like a big gap, like $4 or $5 gap. So you have to figure out, are we in an uptrend or are we in a downtrend? So that'll let you know that, like, okay, if we're in an uptrend and we're not at my support or we're not at my resistance level yet, it's either in one, I wait for it to hit those levels, or two, I won't be trying to go against the trend.
Right.
All right. So right now we're at the fair value gap. So there's really nothing that that price is letting us know, but potentially a short scalp, scalping a short back to your support. But it still would be risky because we need more confluences. So your goal for this next week, I would like you to have is just to set yourself like how to figure out more confluences or how to choose the daily bias. So before every day starts this week, just mark out those levels, the pre-market highs, pre-market lows levels, and then just write on the side a note like, I think price is going to continue higher, break the high of the day, or I think price is going to go lower, and just write it down. And then maybe at the end of the week, we can reconvene and you can tell me if you're right or wrong on your predictions. It doesn't matter if you're wrong, but that's why we're practicing.
Okay. Yeah. I love
Just
that.
write it down. Like, I think price is going to go up, or I think my resistance is right here. So if I think price is going to go down, just write it down. And then that your goal is just to practice predicting. If you're taking signals right now, that's fine. I won't say go heavy on any trades right now. If you're just starting out your support resistance level, but just predict as much as you can, and see if you're right. And then after a while, let's say you're right, and then it moves, and you could have potentially made like 100, 200%. Don't feel any type of negative emotions. Just be like, hey, I was right. Instead of like, dang, next time I'm gonna size heavy because I was right last time. You get me?
Right. Yeah.
Yeah, I don't want you to do that because then you're relating emotions and then taking away from your process, your progress.
All right. Yeah, I'll
Okay,
definitely do it.
awesome. So let's yeah, I think that's a good way to start. I think I think yeah, just make sure you remember those trend lines. Just make sure you remember to color coordinate the difference and remember what pre-market and after our hours are. Okay.
All right.
And
Well, yeah,
yeah,
because like I said, I did not know that about the yellow, the dark blue, the light blue.
yeah, that's tough, and that's very very scary if you're trading and not understanding the difference between the pre-market after hour significance. But but now you do, and that's another tool that you have. Okay. And then
All right.
the next time we chop it up, we can go over like different indicators and stuff.
Okay.
But yeah, I
Works
guess
for me.
yeah, I think that's a good start. I don't want to give you too much information to overload, but I think that's a good start.
Yeah, I'll work on that this week.
Awesome, awesome. Okay. If you want to go back to participants and just click make me the host, so I can make sure I save this recording. And yeah, I'll use this recording as a class for other members who are learning how to chart. Awesome, awesome. All right, John. Is there any questions you have for
Gosh.
me, or you ready to take on this next week?
Yeah, I think I'm ready. I'm gonna give it a shot.
Awesome, awesome. All right then. Well, I will let you enjoy the rest of your day. I'm gonna go get some food, but thank you for hopping on with me.
Oh man, thanks for doing this. I appreciate it big time.
Oh yeah, my pleasure, my pleasure. Okay. All right. I'll talk to you in the chat.
All right, see you, man.
All right.